Welcome to the deep dive. And hey, this deep dive is brought to you today by Access Softtech, the premier provider of digital banking solutions.
Great to be here.
So here at the deep dive, we're all about unpacking insights from material you share. And today, well, we're tackling something we've been working on ourselves: digital dominance, capturing financial mindshare.
Yeah, it's a big one.
It really is. You know, when you really dig into the payment numbers from the last, say, 5 years, one trend just leaps out.
Digital payments.
Exactly. They've gone supernova. We've seen checks, steadily declining. Cash, surprisingly stable, actually.
Which is interesting in itself.
Right. But ACH, debit, credit cards, soaring, just soaring. In 2024, these digital ways accounted for, 77% of all payments?
77%, that's huge.
It is. And it's not just convenience, right? It feels like a deeper shift. Embedded finance, real-time payments, people just getting really comfortable doing everything digitally first.
It's like the whole ecosystem is being rewired.
Totally. So it really gets us thinking, what happens when more and more financial stuff starts happening outside those traditional bank channels?
Well, it's fascinating when you look globally. Take China, for instance.
Okay.
Their mobile payment scene is completely dominated by Alipay and WeChat Pay. Internet companies. They handle something like 80% of transactions.
80%. Wow.
Yeah, but here's the key difference, right? In China, it's internet companies driving that.
Hmm.
Here in the U.S., it's still mainly the financial institutions, the banks, the credit unions.
Okay. That's a critical distinction.
It really is, and it leads to the big question. What if 80% of U.S. transactions somehow bypass the traditional FIs? What's stopping that total shift here, and what would that mean?
Yeah, that's the core of it. And it goes beyond just, lost revenue or losing customers to competitors. Those are problems, sure.
Big problems.
Definitely. But we think the most important issue for traditional places like credit unions isn't just losing wallet share, it's losing mind share.
Mind share. Explain that a bit.
It means losing that complete picture of a member's financial life. It's not just about missing out on one car loan. It's about becoming, just a utility.
Like just transactional.
Exactly. While other companies, maybe the fintechs or big tech, they capture the deeper insights, what people need, how they behave, and that eats away at that trusted relationship.
Right. And just think about how fragmented things often are for people right now. Maybe you use QuickBooks for your small business. Wise for sending money internationally. Apple Pay for coffee. PayPal for, splitting dinner. Bill.com for invoices. Schwab for investing.
Yeah, the list goes on.
It does. And then your credit union. Maybe it's just where your paycheck lands and you have one credit card.
So they get just a tiny slice of your attention.
A tiny slice. You've basically assembled this.
Yeah.
Financial Frankenstein's monster, right? Little bits from all over. No single place seeing the whole picture.
That really hits home how scattered everything can get. And the result of that scattering, when it's time for something big, buying a car, like you said, or maybe even planning for college funds.
Yeah.
The company that already has your attention, the one you interact with all the time for payments or budgeting or whatever, they're often first in line for that loan or that advice.
Because they have the mind share.
Exactly. It's not just about that one loan. It's about being the go-to partner for all the big financial moments in life.
So connecting the dots here, it really highlights this urgent need, doesn't it?
Yeah.
Especially for credit unions, to become that one-stop shop for digital finance.
Become the hub.
Become the hub. People juggling all these apps. If a credit union can integrate things, simplify their members' lives, that's how they win back that mind share.
But that's not simple, is it, being that hub?
Oh, definitely not easy.
It means, doubling down on making the tech seamless? Using open banking, maybe AI personalization to guess what members need before they look elsewhere?
Proactive engagement, not just waiting for them to call.
Right. It's about being that primary financial relationship again, not just another icon on their phone screen. So, wrapping this up, what does this mean for you, listening? Think about your own financial life for a second.
Yeah.
Are you navigating one of these fragmented ecosystems, juggling apps, and who or what really has your mind share when it comes to money?
And what does that mean for your next big financial decision?
Something to mull over. Definitely something to think about.